U.S. stock futures recovering some of their Fed-sparked losses after the S&P 500 saw its worst one-hour reaction to a Fed decision since March of 2020 at the onset of the pandemic. Now, the sell-off worsened as Fed Chair Powell had this to say about the potential for a rate hike next year.
We are making progress. We have made a great deal of progress, and we'll continue to do so and get back to 2% inflation. That's what we owe the public, and we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world.
All right, well, we heard Powell really throwing some cold water on some of the progress that many had thought or hoped at least that we would hear him talk about here. He talked about the fact that the Fed is not going to settle for inflation above that 2% target. We know inflation has certainly remained very sticky. We saw in terms of what the projections are move to the upside here and where Fed policymakers see inflation landing by the end of next year. And I think that when you take a look at the market's reaction, we are seeing a bit of a bounce back here this morning, and that is important to point out. You got all three of the major averages on track to at least open the trading day in the green. So we are seeing some buying opportunity, or some buying action, I should say, off of the lows and where we did close yesterday. But that pales in comparison to the sell-off that we saw, the degree of the sell-off that we saw yesterday, as so much of this uncertainty had been introduced. Now, on the heels of that, Powell was very adamant about the fact that he is confident just in terms of where the economy is right now, how strong that of a footing it's on. We got the GDP number out this morning, that reading at 3.1%, coming in slightly above expectations. You also had the jobless claims number coming in below expectations. That's good news there, just really proving the factor, at least further evidence that the labor market is holding up. And I think the question is the degree of that sell-off, whether or not markets are going to be able to recover, like at least the early action is indicating to some degree here this morning, or is this just going to be more of a dead cat bounce and we could potentially see more pressure as investors do have more time to digest some of that commentary from Powell?
Yeah, context is spot on here. I mean, this is in what we're seeing in the market activity out the gate early this morning. It's much like if you were to shoot a deflated basketball at a 10-foot rim. Well, you're going to get some deflated type of bounce regardless of whether you make the shot or miss the shot. But ultimately, going forward from here, it's been remarkable to see some of the investor reaction. And I was taking a look at the note from BlackRock's Rick Reeder coming out after the print. And he was really zeroing in on what those who are focused in on some of the fixed income assets out there should be thinking about. And from an investment perspective, they hold that interest rates are not going to be the road to return success from here. But they also are looking towards the shorter end of the yield curve right now in order to clip some of the attractive yield and wait for more information to come in for the Fed to evaluate. With a still flat yield curve, attractive real rates as well, they say, of interest still. They think that income in fixed income is much more attractive than being in long-term fixed in one's portfolio allocation. So that, in addition to what we're seeing and you laid out in the equity market landscape right now.
Yeah, certainly. It's all very important to point out. And one more thing I wanted to note here before we move on is the S&P equal weight index. And we bring this up, we talk about this a lot when we're talking about breadth in the market and some of the movement that we have seen. And here we have a year-to-date chart, but I just want you to focus on the right-hand side of the screen, because where we closed yesterday was actually the lowest close that we've seen since September 12th. And I point that out because it's almost like the entire easing cycle then didn't necessarily happen in the markets when you see what was discounted there on the heels of some of that commentary from Powell. So again, when you put into context just what the movement we have seen, the degree of the movement, the selling that we did see following the decision yesterday, following Powell's comments, obviously, when things started to escalate, I think that just really further illustrates some of the uncertainty, some of the jitters that are in the market right now as you look ahead to 2025 when it comes to the further fight here to tame inflation. And then we haven't even gotten into the potential impact of Trump's policies as well.